Okay, we are back. I'm very happy to have on the Goldstein on Gelt Show Ted Jenkin, who has actually been in the financial planning business about as long as I have, 22 years. He has also set up a company called oXYGen, which serves the X and Y generation in terms of financial planning. Ted, a real pleasure to have you.
Thanks for having me on, Doug.
Did I pronounce the name of the company right?
Well, it's oxygen financial. In
Got
fact,
it.
the oxygen, the last five letters are XYGen, and I added an O to it, and that's how the name oxygen came about.
So one of the things, Ted, I want to touch on, which is something I think that, for better or for worse, you do deal with a lot, which is the financial issues related to divorce. Now, I know it's not always a popular topic because everyone wants to, push it under the rug, but the reality is that people are dealing with it all the time. Tell us some of the important financial things people should remember if they're getting involved in a divorce.
Yeah, there are a lot of moving parts if you get a divorce, but I will tell you there are three important things to be thinking about. Number one is to make sure that you know where your credit is at. A lot of times when spouses get married, all of the credit may be in one person's name and not another person's name, and that could affect one of the spouse's opportunity to actually get credit when they get divorced. Two is do you know where all the assets are? It's very interesting when people go through the process of getting divorced that there may be assets that were hidden or how they were titled, and sometimes spouses just don't know where all the money is. And three, know who are the beneficiaries of all of the policies and retirement plans, and that's an important thing to know. Sometimes spouses don't even know who's on the beneficiary for what.
Yeah, I'll tell you, number two was something that on more than one occasion I have to say I've seen wasn't quite handled well. In fact, we were representing a woman who had gotten divorced, and she said, "Yeah, my husband handled all the money," and I said that was fine, and she said, "But we split everything." And then I said, "You sure it was everything?" She goes, "Yeah, even that account in Switzerland, we split." And I said, "Are you sure?" And it turned out that because the divorce was still going on, all of a sudden she mentioned it. And once someone's hiding money offshore, then you really have to worry.
Yeah, that's true. And also, when you're dealing with business owners, especially who get divorced, valuing a business can be very difficult because a lot of times in those divorces, most of the money is actually in the value of the business. And that's something that you really, if you get divorced, you've got to make sure you've got a fair valuation of the business. It's another thing to watch out for.
So how would you recommend someone even start thinking about that?
Well, I recommend, well, it depends who I'm representing, but I recommend that both spouses get their own separate valuation of the business because the one spouse that owns the business will tend to devalue it, and the other spouse that doesn't own it might try to have it have a higher valuation. But you either have to, agree on a common valuator or get your own valuations and then come up with a fair market valuation. But that's a very, very important thing because I've seen certain people get divorced and get swindled really out of a lot of money due to a devaluation of the business.
On the one hand, we often try to encourage people to have joint accounts. You say, listen, you're married, you're bringing your life together, and it's time to bring your financial assets together too. And on the other hand, there's the reality of the real potential for divorce. How do you address that with clients, maybe when they're still getting married?
Actually, it's a really interesting question because I'm in the X and Y generation, and there are a lot of Gen Xers now that are getting married for the very first time later in life. Not only men, but women that have built up their own financial assets. And so I do recommend getting started slow. You want to have one joint account so you can have some financial commonality together, start to learn how to be able to talk about money and share assets. But I'm not actually a big fan the later in life that you get married to put it all in a joint account to start. You start slow, you develop some behavior and commonalities together, and then you can figure out how to merge family finances in a more sincere way.
hmm Of course, let's go back to our original topic, which is divorce. When a couple finds themselves getting divorced, they end up going, in and out of court, and they have legal fees, which can really run up to and wipe them out. What's the best way to avoid that?
Yeah, look, if I could answer that one, right? The most funny thing, Doug, in all the years of doing this is talking to men, especially men who say, "Yeah, I've talked it out with my wife and she's happy and I think it's going to be pretty easy to get this done." And that's when I start to hit the laughing button because it's never easy to get it done. Look, if you can find yourself a mediator and you can mediate it yourself, that will save you a lot of time, money, and energy, and potentially impact on your children if you have them. But if you're not going to have a mediator and you have separate divorce attorneys, I don't think that there's going to be any simple way to avoid arguing. There's always something picky in what I've seen in the last 25 years.
We're talking with Ted Jenkin, who has been in the financial planning business for decades. He started a company called oXYGen, specializing in the X and Y generation. He's also all over the media. You've probably seen him around everywhere from the Wall Street Journal to the Huffington Post. Ted, let's dive in a little bit further about when people are getting married and they need to begin to plan for the future. Do you recommend that they sign a prenup?
I mean, you are saying they want to get married, right? No, I'm just kidding. The fact is that I think it really depends part on your financial situation. The more assets that you have, the more that this subject of having a prenup is going to come up. And like I just said, this is not just true of men, but you have women that are now 35, 40, 45 years old that may be getting married for the first time that have built $1 million of assets in their own name. And so, yes, I do think a prenup can be effective. There are also a lot of couples today that are same-sex couples. And, if they're done correctly, they can be effective. You've got to have somebody that really specializes in doing prenups. They know the laws in your particular state, and they can be effective. You just have to decide how much you want to potentially hit the emotional baggage when you set them up, because sometimes a spouse will say, yeah, I'll be okay with it if we have a prenup, but the truth is they won't. So I find, Doug, that it ends up being more of an emotional conversation than it really does a financial conversation.
But ultimately, is it effective? In your experience, does it work out
If,
and solve the problem?
if they're done right from a legal, technical, financial perspective, yes, they can work. Have I found that it makes a solid marriage? No,
Mhm.
no. No, there's always deep harbored feelings about money, and they always come to the surface.
So when you do financial planning for someone who is divorced or about to get divorced, how does that differ from when you are working with, let's say, a married couple?
Well, there are a lot more moving parts because some people are divorced and they're still unmarried, and then where it gets more complicated, Doug, is if they're divorced and then they get remarried. And you've got to consider what's happening with things like child support or alimony, as it pertains to both their cash flow and how it potentially can affect their income taxes. You have to consider what's going to happen for things like college education planning. Will the ex-spouse or husband or wife pay for it? Are you going to have to pay for it? Did the divorce documents specify what would happen? You have to consider what's going to happen with insurance. Are the insurance policies still have beneficiaries where you, the ex-spouse, are on the policy, or has that changed? So you have more moving parts to ask around the financial plan than you would just a single individual or a married couple.
It's always seemed to me that the clients that I work with who are divorced, they're always going back to their ex-spouse. They're never done. There's always a continuing negotiation, literally for years. Is that your experience as well?
Oh, that's 100% true, Doug. It's funny that a spouse may be getting $1,500 of alimony or child support, and then you'll hear the husband a few years later say, "Oh, I know she got a good job now, and she's hooking up with some guy that's got a lot of money. I got to go back and talk to her and see if I can knock this down to $1,000 a month." And you are absolutely right. It happens all the time. Now, I will say I've seen some cases where there's been child support or alimony, and the other spouse, after the divorce, has done well and actually gives the other spouse more money. So I've seen it work out both ways on the negotiation side.
A few minutes ago, you mentioned something about Social Security, and I know it is very important how people get spousal Social Security and even that it's available to them if they're divorced. Can you give us some descriptions about how that works and what are some of the risks?
Well, the big question is whether or not you're going to be married for 10 years, and if you're married for 10 years or more, you might be eligible to collect some Social Security even if you get divorced from your ex. This is also funny as a side note, depending upon the state you live in and the alimony you're going to get, they generally will have, most states will have like a 3-for-1 rule that you might get 1 year of alimony for every 3 years that you're married. But it's very important because there are a lot of ex spouses that were married for 15 years, Doug, and then they get divorced and they're doing their own financial plan as a single man or woman, and they may not even realize that they're eligible to collect Social Security down the road from their spouse.
And I think the caveat to that, of course, is if they didn't get remarried, because then that turns
That's
it
correct.
off.
That's correct.
So it actually is the government discouraging older people from getting remarried and instead perhaps, living in sin. Ted, we won't go there, but we're just about out of time. We've been talking with Ted Jenkin, a financial advisor in the States who founded oXYGen Financial. Ted, in the last few seconds, just tell us, how can people learn more about you and follow your work?
Well, if you want to get a brochure on 5 financial mistakes to avoid in a divorce, just go to oxygenfinancial.net. We'll get you a free brochure that you can look at so you can help yourself for your future. You can always follow us on our Twitter handle at oXYGen Financial.
All right, we will put a link to that at the show notes of today's show at goldsteinongelt.com. Ted Jenkin, thanks so much for your time.
Thanks, Doug, for having me.
You've been listening to the Goldstein on Gelt Show with money maven Doug Goldstein. Doug's weekly radio show is heard around the world, but if you miss it, you can download the podcast at www.goldsteinongelt.com. The Goldstein on Gelt Show gives you up-to-date financial ideas so you can get on the path to financial freedom. If you'd like your questions answered on the air or off, send Doug an email to doug@profile-financial.com. It's your money for your future, so join Doug every week to build your wealth on the Goldstein on Gelt Show.